Stephen Gallo is the head of market analysis at Schneider Foreign Exchange. According to Bloomberg's data, he is the #1 most accurate analyst when it comes to foreign exchange forecasting. And Stephen, you were out with a bold call today saying with conviction, Eurozone is firmly established on a trajectory towards just breaking up.
Yeah, well, Margaret, look, I have always postulated that the Eurozone, economic and monetary union in Europe, can work in its purest form and in its smoothest functioning form. I think that the Eurozone and economic and monetary union in Europe is nothing less than a modern economic marvel. But it's going to take the right political leadership to make that happen. And, you know, I'm commenting specifically today. I was looking at the news yesterday about, Finnish demands and Austrian demands, and even some non-Euro area members' demands regarding collateral for this Greek bailout. Now, a healthy debate about a disbursement of aid for Greece is good in an economic and monetary union, and hopefully one day a political union consisting to a degree of individual sovereign states. However, the problem with this situation is that there is not a unified approach to dealing with these bailouts, and that is Europe's largest problem. There is no unified European approach to this situation, and until policymakers start to send those signals, yes, I think break up, because my view is essentially is that the longer they let these problems fester and they don't come to the table with a comprehensive solution, the more expensive and burdensome it's going to be to keep this project together for many parties involved.
Yeah. Now, well, give me your forecast, though, where you think the euro is going to be headed. I'm looking at the dollar index in front of me. The Dixie is under pressure today. Well, what's next for the dollar and the euro?
Yeah, well, I'm cautious as we head into the end of Trichet's presidency here. You know, we have Draghi taking over in October, so I'm cautious about what that change in leadership is going to mean for the euro and ECB monetary policy. But overall, though, I think what's most likely, the most likely scenario that I see is that in the next few months or so, we get more signs from European politicians that they're, putting in some of the necessary pieces of the puzzle that the market needs to see to shore up confidence from a near-term perspective in the euro. And I actually am starting to think, based on my year-end forecast for 2012 in euro dollar, I actually think we're setting ourselves up here for a fairly significant sell-off in the dollar, because I'm looking into this 2012 year as a year when not really much gets done on the U.S. fiscal situation. Obviously, we've got that general election at the end of next year. So that's a big concern for me, as well as also is this monetary policy stance that's now being ushered in by the Federal Reserve, this ultra-loose policy stance that they're continuing with.
You are also betting that we may see some action this weekend out of Japan. You saw the yen hit the highest level since World War II against the U.S. dollar. Intervention's just a matter of time?
Yeah, well, one of the problems, I think so. I mean, based on the language that they've been shooting off from Japan, I mean, that's what it seems. I think one of the issues here now, though, is because you have the SNB largely successful so far in their intervention, you're running out of safe havens. That's right, the Swiss National Bank. You're running out of safe haven currencies here for the market to trade. You note that the rise in the price of gold has been fairly extreme so far. So what else is the market going to trade from a safety perspective? There aren't many other avenues out there besides the yen. Now, I don't believe that Japan or the yen are fundamentally safe when you consider what's going on in Japan as a whole. But it is an avenue that the market likes to trade. And so the Bank of Japan and the Ministry of Finance are running into some very, very heavy pressures here.
Well, you had some substantial headlines, depending on your perspective. If you're scared, you paid a lot of attention. If you have some perspective, maybe you wrote off the denial by Credit Suisse, the denial by UBS, that they were the banks asking the Swiss National Bank to help gain some dollars by tapping the Fed swap lines. That headline got a lot of attention. How did you interpret it?
Well, I think overall the headline there, and also the tapping of the ECB's dollar funding facility this week, first time in about a year and a half, I think that was, is a general sign of the malaise affecting the European banking system. The situation is still one of contagion, and essentially really what contagion is fear of exposure. So you have sovereign debt distress within the euro area, and then obviously you have a lot of financial institutions which are sitting on a lot of that sovereign debt, on that sovereign paper. and so there's not a whole lot of lending going on in the wholesale funding markets to these financial institutions. The real litmus test, though, will not be the remainder of August. The real litmus test for the banking system as a whole and for the global financial system, I think, will be September, when most market participants come back to their desks from summer vacation and holiday, and we really start to see how fluid the wheels are likely to be moving within the banking system, and how greased up they're likely to be with liquidity and wholesale funding.
It sounds like you're betting on sovereign ratings downgrades for France and for Germany. You think that's going to happen in September?
I don't know about September. I mean, really, it depends on how quickly European politicians move to shore up the cracks which are still visible within economic and monetary union. I think ultimately, when the core European nations, the core euro area nations, move to fully guarantee some of the largest outstanding risks of sovereign debt within the euro area, I think that is going to weigh on their AAA ratings on a medium-term perspective. But that doesn't mean that I think that the UK, Great Britain, and the United States are much safer from the perspective of their AAA ratings. I think it's all a relative thing. And, the most interesting thing about the scenario we're now faced with the United States getting downgraded, potentially more, euro area nations getting downgraded, potentially Britain getting downgraded, is that it's happening at relatively the same time. So if it wasn't happening at the same time, it would be a situation where the dollar might sell off very aggressively, or the euro would sell off even more aggressively. But it's happening at the same time. So you sort of have this logjam in the currency markets, and there really isn't a heck of a lot of places to run all at once.
Stephen, it's always interesting to talk to you. Have a great weekend.
Thank you.
We're going to leave it there.
Thank you. Bye-bye, you too.